What is up, investors? Jason here. So in this video, we're going to be talking about Robinhood stock because Robinhood just had their IPO. So what we're going to be doing in this video is we're going to be taking a look under the hood. Ticker symbol HOOD. Now, just to be clear up front, I don't own Robinhood stock and I don't plan on buying Robinhood stock anytime soon. And this video is not financial advice for entertainment purposes only. I'm just going to be taking a look at the stock. So you guys should do your own due diligence with any investment because there is always a lot of risk involved with all investments out there. So let's get to this. All right, so this is Robinhood stock's performance on the first day out on the market. Now, we actually do know what the valuation of Robinhood is now at this moment. Currently, Robinhood has a valuation of $29.67 billion. And as far as where this stock traded on its first day, it traded between $33.35 and $40.25. So that was the price that it came out on. The high was the $40.25. Now, this was a much different IPO too, because Robinhood did allow their investors to be able to buy this stock on the earlier IPO access. So the same time that Wall Street would usually be able to get in there, the big institutions and such, to be able to buy this stock, Robinhood allowed its users to be able to buy this stock at the same time, which is something that isn't very common. And that also doesn't really make the institutions too happy, because then they have a bunch of people that, they would consider not very intelligent investors, or whatever the institutions think about retail investors. They're not always big fans of the way retail investors have been performing recently, and especially the way that retail investors are acting on Robinhood. They're not very pleased about that usually. But Robinhood had a few things that did go on with their IPO. So they allowed that early access. They set aside a reserve amount of shares between 20 and 35% of its IPO shares for its own clients, which CEO Vlad Tenev said he expects will be one of the largest retail allocations ever. But at the same time, they allowed employees that had owned stock in this before the IPO to be able to sell up to 15% of what they owned right after it went public. So that did create a lot of selling off that did happen. But then there was a bit of a retail pool that did allow the stock to be able to trend back up because of that. And I'm sure we also saw a lot of institutions jump in on the stock right after these pretty large selling off that did happen, probably when the employees were selling. And they did drop the stock pretty low, and it was followed by a lot of buying activity that happened right after that, followed by a lot of selling off that happened, and then followed by a lot of buying activity. So the stock was really just kind of all over the place. But at the same time, we've seen IPOs perform a lot worse when they hit the market, like Coinbase, for example. That one, in my opinion, kind of was a disaster that happened. Now, since the IPO price was set at $38 a share, when employees are selling off 15% of this right as soon as it just drops in the market, this stock could have easily gone down to $30 because of that and just continued to decline. So luckily, there was a lot of retail buying activity that did follow all that selling off, because it could have been a very bad situation. Now, as far as the whole offering went, about 52.4 million shares were offered, and the company expected net proceeds of $1.89 billion, and about 2.6 million shares were offered by existing stockholders. Robinhood will not receive any proceeds from the sale of shares by the selling stockholders. Now, I'm going to do this in the simplified version from their SEC filing of the revenues here. For the year ended December 31st, 2020, as compared to the year ended December 31st, 2019, the revenues grew 245% to $959 million, up from $278 million. They recorded a net income of $7 million compared to a net loss of $107 million. Their adjusted EBITDA was $155 million compared to negative $74 million. In addition, for the 3 months ended March 31st, 2021, as compared to the 3 months ended March 31st, 2020, their total revenues grew 309% to $522 million, up from $128 million. They recorded a net loss of $1.4 billion, which included a $1.5 billion fair value adjustment to their convertible notes and warrant liabilities compared to a net loss of $53 million. And their adjusted EBITDA was $115 million compared to negative $47 million. Now, Robinhood is showing really good growth, actually. So if we were looking at their growth from funded accounts in 2019, at the end of 2019 to the end of 2020, at the end of 2019, they had 5.1 million funded accounts. And in 2020, they had 12.5 million funded accounts. But if we look over at where they were at the first quarter of 2021, they had 18 million funded accounts. So that's a large jump, actually, in growth just between those 3 months period from the end of 2020 to the first 3 months of 2021. That's a really large increase in my opinion. They are reporting that they have 17.7 million monthly active users. So a large portion of the people that have accounts that are funded at Robinhood are active. And in the last quarter, they also reported that they had close to $81 billion in assets under control. And as far as how much revenue they're making per user, they make $137 per user is the average. Now, when they list how the assets that are under control, how they're all kind of displayed here, it's a bit interesting. So as far as equities go, they have about $65 billion in equities, or stock, I should say. And then options, they have $2 billion. And then cryptocurrencies, or about $11.6 billion. And then cash held by users, about $7.6 billion. And then as far as the margin balances, so that would be negative $5.43 billion. So a lot of stuff is pretty interesting to me, like the revenues and the amount of assets that they have under control. Now, Robinhood has been a very big game changer to the way that people invest, and how the pandemic, happened with Robinhood already being existing out there. When people really had the time to think about what to do with their money, it really got people more interested in investing, and that's the great thing about it. And I like that about it. And it was such a big disruptor to the entire industry. It got rid of all those commission fees that people paid, and it got companies to just drop those. I mean, many companies weren't ever really making money off those commission fees anyway. So this led a lot of people to jump in the market and start investing, and really helped a lot of other companies really grow because of that. And then with the whole crypto craze, Robinhood was able to really help out with that whole craze as well. So it's going to be something to really watch and see how it all develops. Now, I'm not going to be jumping in this stock right now, or I might never even buy this stock because, one, I don't like buying into IPOs. I like letting things calm down and wait it out and see what happens. But also, a company like this, a stock exchange, isn't really one that I invest into. I was really interested in Coinbase, but that was a bit different. It was more dealing with crypto. But I think that there is a lot of potential here with Robinhood, but it's still waited to be seen how it does perform overall. Now, I like to hear from people that have invested in this, or people that are considering, or people that are just going to completely stay away from it. I like to hear from all you guys. So with that being said, please like, share, comment, subscribe. New videos coming out on my channel all the time. Thank you guys for watching. I'll see you all in the next video coming very soon.